look at what's happening, I mean, there's so much controversy right now around just where debt has gone right across. I mean, globally, these are issues that are happening with every country. Canada is really not any exception to that. You know, the debt level of Canada and, of course, the population in general. I think the recent numbers are 186%, whatever the number is, of debt. We know that Canada, like the US, is a consumer driven economy. Debt driven consumerism is really what driving this economy. And
Mhm.
that's a lot of that has to do with real estate. And gosh, it's just so crazy right now. But when you look at also what's happening in the US, so many conversations, so many pundits and talking heads out there going, U.S. reserve currency going to go away. What's your thoughts on it? Where are you in that conversation? Are we going to lose? Is the U.S. going to lose that reserve currency status? Any thoughts on that, or how about your timing? Is that going to be next year, or what's your view of the world? And I'm just kidding, Chris. I don't know anybody
Yeah.
can call timing, but what's your view?
No. Yeah. Well, the only people who fill me in with breaking news is my 11 and 13-year-old kids. I haven't watched the news in over 10 years.
Yeah,
I still don't have cable. And I can't stand politics. I can't stand news. It's all negative.
yeah.
Uh, I live in my own little bubble. We've got a great spot here. I just focus with my subscribers. I help everybody. We trade. And I mean, I really stay out of that bubble because as soon as I listen to politics and what's going on in this world, it is so depressing and there's nothing positive about it. So um, I don't know. Everybody's been talking about the dollar collapsing for, a decade or
Ever.
two.
Yeah.
They've talked about silver going to the moon because the currencies are going to collapse and uh, dollar's going to lose its reserve currency. There's probably a time when the dollar will lose its reserve currency. It's going to go digital. Something's going to change. I don't know. Um,
It is
I
interesting, right? And I don't listen to any mainstream media at all, like no local news at all. Like I just don't waste my time. And
mhm,
I can't help but being drawn into the politics because I see what our current government is doing drives me freaking crazy. The level of incompetence and mostly the level of the degree of not being accountable for bad performance just makes me. I can
yeah,
get fired up about politics. Make no mistake about that. We won't go down that path, but when I look at, we have to, as investors, I'm always looking for opportunities to say, okay, well, how do I preserve capital? How do I get a return on investment? And that's why, of course, I'm excited to have you on the show. Now, you wrote a book, and did you write a second book, or is it the one book you wrote? I want to get a little bit of into what those books or that book is about. Give me a little bit of background on the book or books that you've written, Chris.
yeah. So I published two books last month in May, which um, Technical Trading Mastery. This
Yeah,
is my second edition. So I wrote this first one, the one that Larry Williams kind of reviewed back in 2014. This is a new one. I literally went from almost 300 pages in the first book. The second edition is 120 pages. I'm like, you know what? Forget all the other stuff. Let's just dive into the meat and potatoes. This is what you need to know if you want to become a technical trader or investor. And then I published another book called Asset Revesting, which is all about only holding assets that are rising in value through the eyes of an asset hierarchy of only focusing on a certain set of assets and just rotating through those most liquid assets and waiting in cash. And that's the strategy that I think is going to be like industry breaking. When you understand how it works, you see how it goes, and then you look at the buy and hold strategy, people are like, why the heck are we not doing this? Like the buy and hold makes no sense uh, it doesn't give you any protection to the downside. And so these two books, they're kind of a bit different for different individuals. Technical trading's for that active trader, active investor who really wants to kind of feel and breathe and actively trade the charts. Whereas asset revesting, you're buying into a different style of investing, something that's just protecting capital always. And then when it's safe, it steps out of its shell and goes in and invests. And usually it's only for a few months and then, peels the money back and preserves it again. So it's, a very kind of different way of investing compared to that buy and hold forever and hope and pray when you retire, you're not in the middle of a bear market or some type of recession.
So along the way, from an investment point of view, Chris, I mean, you've made, like everybody in investing, you've made your mistakes, you've learned your lessons. Is there anything that stands out that you would, caution investors around, given, again, I know you're like me, you don't follow mainstream media, but there's still a lot of I guess we'll call it clutter out there, given what happens in Twitter or on some other social media platforms. Lots of 30-year-olds getting rich in Bitcoin or whatever the story is that's going on. Uh, if you're kind of looking back, reflecting on not just lessons you've learned, or how about those that you've seen others, the oversights or the mistakes made along the way, is there one or two kind of guiding tips or flags you would give to people to pay attention to as they look at where they might allocate capital as an investment?
Yeah, I think the biggest thing comes down to people's emotions and expectations. So people expect it's difficult. There's different groups of traders and investors, right? You've got people who have smaller accounts, say, 50K or 100K and less, that have to be fairly aggressive to try and generate big returns so they can either live off them or try and grow it rapidly so they can retire. So they fall under a very kind of active side of things, and they are victim to news, to economic data. They get sucked up in the hype, and the media is great. How they word stuff, it just always makes you nervous and scared.
Yeah.
So they get stuck in the emotional loop, and then on top of it, they don't typically have a strategy in place to be able to execute those trades and navigate them. They're trading off waves of fear and greed. They're buying at the wrong times, and they're over trading. And for some reason, traders think the more you trade, almost the more money you can make. And I think it's completely backwards. I think, my whole strategy is, how do I do the fewest amount of trades with the smallest potential losses and make the most money? And I can tell with my strategy, with my asset revesting strategy, I tell subscribers, I'm like, we are like 3 or 4 days away from a potential buy signal. It's a kind of a nightly update. And then sometimes I'll be like, guys, we're a month or two away from, getting out of a signal or potentially getting into a new one. And so we can go out and do other stuff. We're not glued to the screen. But short-term traders feel like they need to trade, and they're out there hunting for trades. And when you're looking for a trade, your brain will find one. And it might not actually be a good trade. It's just they're looking for one because they think they need one and they want to do trades. It is addicting. It is like gambling. It has a huge rush to it. And it really sucks people in and really kind of screws them over. And then you've got the more passive investors who they're all about, how do I protect my retirement? How do I, not get caught on the wrong side of this down move? I'll do whatever it takes to do it. And they're willing to, actively manage their long-term positions, which doesn't require much. We can just shuffle things around. So it really just comes down to, having that mindset of, you can't make fast money in the market. It's just a fluke, or it's not sustainable if you do. And the stock market is a long-term game. It is not something for quick riches. You have to expect it's going to take years and years and years to build your portfolio out, your value. And it's just like real estate. But people think because there's fast stuff moving all the time that they should be making a fortune and doubling their account every year. It's not the reality. If you're trying to do that, you're going to blow up your account. I've blown up several accounts when I was learning, and you have to hit bottom. Typically, you got to lose everything or have a serious catastrophe. We've had subscribers in the past, they lose their shirt like in 2008, not specifically from my signals, but everything blows up and they're like, it was the worst experience of my life. I had like seizures, lost my wife, all kinds of stuff. Like these bear markets, these stage 4 declines are so dangerous. There's 6,500 suicides directly related to falling stock prices in 2008 to 2009. That's wow. Prices just fall, and it's literally killing people. So people don't realize how dangerous we're walking on this edge of another one happening. And so I think the biggest thing people can realize is the stock market is a slow but steady way to build growth. Real estate, if you put real estate and stocks long term, they're kind of neck and neck. If you do it properly, they both make the same returns and keep on going. And so, diversifying between the two and realizing it's not a short-term game, it's a long-term war, and you're always at battle with the stock market trying to take your money. The second your money goes in, it's going to try and find a way to take it back. So you got to protect it, right?